Ginkgo Bioworks is the leading synthetic biology platform company, aka the AWS of synthetic biology. It's in the process of merging with the SPAC called Soaring Eagle Acquisition Corp, ticker SRNG. The business combination is expected to be completed in the third quarter of 2021, and the ticker symbol is expected to change to DNA. And full disclosure, I do have a position in this SPAC. In this video, I'm first going to give a high-level overview of Ginkgo Bioworks. Second, I'm going to give my bull case for the stock. Third, I'm going to give my bear case. And fourth, I'm going to go over my game plan on how I plan to invest in this stock. All this right after I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on the subscribe button and notification bell if you haven't yet. And please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. So without further ado, let's get right into it. Ginkgo Bioworks aims to be the AWS of synthetic biology. What is synthetic biology? It's basically using DNA, A's, C's, G's, and T's, to program cells to make things. For example, we can program cells to make leather and other materials that are usually sourced from animals. We can also program cells to make plant-based burgers to have the same taste and texture as the real thing, just like an Impossible Burger. And maybe, in the distant future, we can bring back the woolly mammoth. What are some real examples of projects that Ginkgo Bioworks worked on? Last year, Ginkgo supported Moderna with process optimization for key raw materials used in the manufacturing of its mRNA vaccines to fight the global pandemic. And in my opinion, without Ginkgo Bioworks, the vaccine would have taken a lot longer to get into people's arms. Another example of a project they worked on is with cannabis company Cronos. Now, many of us know cannabis for its two main chemicals, THC and CBD. But the cannabis plant actually produces hundreds of different cannabinoids with a range of potential pharmaceutical applications. Some of those molecules, such as CBC, CBG, and THCV, are present only in minute quantities, making them impractical to extract and purify. But Ginkgo's foundry was able to build strains that produce these cannabinoids at high quality and purity. Now, those were just two examples, but Ginkgo's platform can be used across a wide spectrum of industries. So how does Ginkgo Bioworks make money? Well, the first way they make money is with their platform, which leverages advanced robotic automation, proprietary software, and data analytics to continually improve the technology, which they call Foundry, as well as the knowledge and reusable biological assets, which they call Codebase, required to engineer biology. So when a company uses Ginkgo's platform, they get charged a usage fee. The second way they make money is through royalties. Once a company starts monetizing the product that Ginkgo engineers for them, they will start paying Ginkgo the agreed upon royalty. This is not a very predictable revenue stream because some companies may not take their product to market for several years, if ever. A third way Ginkgo makes money is by receiving equity stakes in the companies that they partner with. Currently, Ginkgo is averaging $15 million in equity per program, and the current equity value of its major programs is over $500 million. Ginkgo also generates revenues from its burgeoning biosecurity business. Next, let's talk about Ginkgo Bioworks founders and leadership. The founders first met at MIT and have been working together for 20 years. One of their founders is Tom Knight, who is known as the godfather of synthetic biology. The board of directors is very experienced with backgrounds from Bayer, PacBio, Illumina, and Palantir, just to name a few. And Harry Sloan from the Soaring Eagle SPAC will also be joining the board. Some of the big name PIPE investors include accounts advised by Cathie Wood's ARK Invest, Cascade Investment, which is a Bill Gates investment vehicle, and Baillie Gifford. Next, let's take a look at the financials. Their Foundry billable revenue was $64 million in 2020. They're projecting $100 million in 2021 and projecting it to grow to $1.099 billion in 2025. They're projecting 23 new programs in 2021 and projecting it to grow to 508 programs in 2025. And those new programs will help build up their royalties and equity portfolio, which, as I mentioned earlier, is worth approximately $15 million per program. Now let's take a look at their transaction overview page. Assuming no redemptions, at $10 per share and 1.7803 billion pro forma shares outstanding, the post-transaction equity value is projected to be $17.8 billion. Post-transaction, they expect to have $2.639 billion in cash. The existing Ginkgo shareholders will own 84%, SRNG shareholders will own 10%, PIPE shareholders will own 4%, and sponsor shares will own 10%. I didn't go over the entire investor presentation, but I'll leave a link in the video description, and I encourage you to check it out if you're interested. So what is my bull case for the stock? First, I like that Harry Sloan SPACs have a very good track record of finding targets. They took both DraftKings and Skillz public, which both did very well compared to their $10 SPAC IPO prices. Second, it really seems like Ginkgo is building an economic moat, and it seems like they really could become the AWS of synthetic biology, which is projected to be a $2 to $4 trillion market in the next 10 to 20 years. In my opinion, Ginkgo Bioworks seems to be in a league of their own. Third, I do like the fact that Baillie Gifford and ARK Invest are part of the PIPE. Those are two investment firms that I have a ton of respect for. In my bull case, I'm going to take their 2025 projected Foundry revenues of $1.099 billion, and I'm also going to use their 2025 projected number of new programs, which is 508, and multiply that by $15 million, which is the approximate value that they're getting from their royalties and equity. 508 times $15 million equals $7.62 billion. If I add both together, I get $8.719 billion in value generated by 2025. To give myself a margin of safety, I'm going to multiply that by 80% to give me $6.975 billion. And I'm going to give them a PS ratio of 20, which I think is very reasonable for a company with Ginkgo's growth prospects. That leaves me with the market cap of $139.5 billion. The current implied pro forma market cap is $17.5 billion. So that would be a 697% return in 5 years. So what is my bear case? First, there may not be as much demand as the company is projecting. All of the potential use cases for synthetic bio seem really cool, but there's no telling how practical it will be to develop some of those projects. Second, their royalties and equity stakes are highly unpredictable. Receiving $7 billion in royalties or equity will not be as liquid or stable as receiving $7 billion in cash. So in my bear case, I'm going to knock down the projected 2025 value add of $8.719 billion to 25%, which gives me $2.18 billion. I'm going to keep the price to sales ratio at 20, which would give me a market cap of $43.6 billion, which would still be a 149% return in 5 years. So what is my game plan? To me, this seems like a very intriguing investment opportunity. Like I said earlier, I do own some SRNG units in one of my portfolios that I mainly use to invest in pre-merger SPACs. So in that particular portfolio, I plan to sell or redeem my shares before the merger is completed to free up some cash. But in my long-term portfolios, I do plan on adding SRNG and just dollar cost averaging into the stock. I might even add some warrants to give myself additional upside. Friday's closing price for the common stock was $9.90, and it was $2.11 for the warrants. In my opinion, those are very reasonable entry prices given my 5-year outlook. All right, so if you want more insights into my portfolios, or if you just want to support the channel, check out my Patreon to get all of my buy and sell alerts from my Fidelity All SPAC portfolio. There's also access to my private Patreon Discord. So be sure to check out my Patreon. A link is in the video description. And as always, a huge thank you to the awesome patrons that have already joined. And also, be sure to check out my free public Discord. We have over 500 members. It is the most awesome community to talk about SPACs and other stocks. It's absolutely free, so be sure to check it out if you're interested. And if you haven't signed up for Webull yet, be sure to check out my link in the video description for information on how you can get 2 free stocks valued up to $850. And if you haven't signed up for M1 Finance yet, be sure to check out my link to find out how you can receive $30 for signing up. All right, so let me know what you think about Ginkgo Bioworks. Are they gonna be the AWS of synthetic bio? Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I will see you next time.